Good morning, traders. Welcome to BCR's morning market analysis. First off, taking a look at the US dollar index. The dollar index strengthened last week, reaching around 100.54, its highest level since November, and recording a gain of roughly 1.7% for the week. The move was largely driven by safe haven demand as geopolitical tensions escalated following warnings from President Trump about potential military action against Iran. In periods of global uncertainty, investors typically move funds into the US dollar, which tends to benefit from its status as a global reserve currency. The shifts also placed pressure on energy-sensitive currencies such as the euro. However, the dollar eased slightly at the start of this week, slipping back toward the 100 level after reports that the United States may organize a multinational coalition to escort ships through the Strait of Hormuz. That development helped calm some market fears and reduce immediate demand for safe haven assets. Looking ahead, attention is firmly on the upcoming Federal Reserve meeting and the latest economic projections, as well as comments from Fed Chair Jerome Powell. Investors will be watching closely for signals about the future directions of the U.S. interest rates. For now, the dollar remains relatively supported by geopolitical risk, although any signs of easing tensions or stronger global growth could trigger short-term volatility. Next up, taking a look at WTI. Crude oil rallied strongly last week, once again approaching the $100 per barrel mark. The primary driver behind this surge has been the escalating geopolitical tension surrounding Iran and the disruption of shipping through the Strait of Hormuz. This narrow waterway is one of the world's most critical energy corridors, responsible for transporting roughly one-fifth of the global supply. Uncertainty around the conflict has increased concerns about potential supply disruptions, which has supported higher prices. U.S. officials have indicated that military operations could continue until strategic objectives are met, while Iran's increasingly firm stance has further heightened tensions in the region. Although oil prices have experienced occasional pullbacks, the broader market remains sensitive to developments in the Middle East. As long as geopolitical risks persist and key shipping routes remain vulnerable, oil prices are likely to stay elevated. From a technical perspective, the market is currently testing a key resistance zone near the upper $90 range, which will be important in determining the next major direction for prices. Gold prices have declined for several consecutive sessions, recently hovering near the $5,000 per ounce level. The pullback has been largely driven by rising energy prices and renewed inflation concerns, which have reduced expectations for near-term interest rate cuts from the Federal Reserve and other major central banks. Because gold does not generate interest income, higher interest rates can reduce its attractiveness compared with yield-bearing assets. A stronger US dollar has also added pressure to gold prices in the short term. Despite the recent decline, the longer-term outlook for gold remains relatively constructive. The metal continues to be viewed as a traditional hedge against geopolitical uncertainty and inflation. Technically, gold remains above the important psychological support level of 5,000, suggesting that the broader upward trend is still intact, although momentum has slowed and resistance levels above the market continue to limit further gains. Lastly, let's take a look at the AUD-USD pair. The Australian dollar recovered modestly at the start of the week, moving back above the 0.7060 level after declines in the previous week. The rebound has been supported by expectations that the RBA may continue tightening monetary policy as inflation risks persist. Markets currently anticipate another interest rate hike, with the possibility of further hikes later in the year. If these expectations are confirmed, Australia's interest rate outlook could provide some support for the currency. At the same time, global developments, including rising oil prices and ongoing geopolitical tensions, are contributing to broader inflation concerns and influencing central bank policy expectations worldwide. From a technical perspective, the AUD-USD pair remains moderately bullish while holding above its rising 50-day moving average, although momentum indicators suggest that the pace of gains has slowed after the strong rallies seen earlier this month. That's all for today for this morning's market analysis, and I'll see you in the afternoon review.